And welcome into Making Sense. You know, the Alabama National Fair was here a few weeks ago. When you were there, you could have rode the roller coaster with things going up and down, or you could have probably just looked at the newspapers over the past couple of weeks and looked at the stock market, another kind of a roller coaster ride. Well, to kind of get us off the roller coaster or maybe get us on an even keel, we have Brandt McDonald with us today. And Brandt, you're with McDonald, Barranco, and Hagen Wealth Management.
That's correct.
We got to get all the names together in there, right?
That's
and
right.
You've been with us before, and we appreciate you coming back because, you know, obviously two things. We're getting near the end of the year, and people need to be thinking a little bit about, well, how am I going to end this year and get myself positioned for 2015?
Right,
but
right.
yet we still have to get done with 2014.
Well, we do. Yeah, we absolutely do. And certainly there are a whole lot of things that we need to contemplate as we go into the end of the year. I mean, you know, we can start with recent market volatility, and that was a great analogy, you know, about the fair and the roller coaster, because that's probably what it felt like for a lot of people. And you know, our research sort of indicated that we could expect a lot of this volatility, and we probably can expect more as we go throughout the rest of the year. You know, what we're looking at here, in my opinion, you've got a couple of different situations. I mean, one is the old-fashioned sort of fundamentals that you look at.
Right.
A lot of times those are can be somewhat more predictable. They're much more manageable. You can work your way through those problems. So let's talk about the fundamentals real quick. So the U.S. economy is really the only developed nation in the world that continues to grow. Now, it's not growing at a super fast rate, but it is expanding. The economy is growing. Whereas if you go around the globe and you look at Europe, for example, this is an 18-member union with 18 different constitutions, different governments. Some of these countries that are in the north really don't need monetary stimulus. They don't need the low interest rates. They would rather focus on fiscal reforms and that type of thing. Whereas a lot of the other countries down in the south, they desperately need monetary stimulus. But they don't have a federal government. And therein lies the problem, is trying to find sort of this commonality or a solution among all 18 where they can get together and address the region's problems as a whole. Because they have this common currency called the euro. And at this moment, I think every one of us believes that Europe is undoubtedly in a recession.
Right.
And so Mario Draghi, who is the chairman of the European Central Bank, that's sort of like our Federal Reserve System. He has done everything he can. I mean, he's reduced interest rates. He's come up with some sort of some degree of an asset purchase program, but it's not nearly what our Fed did with this quantitative easing that everyone's heard about so much. So from a fundamental perspective, you got the entire globe, from the Pacific Rim with China and their very sort of unorthodox private banking system, which is an unregulated system, is creating problems, and they've experienced a significant slowdown over there in that area of the world, combined with the recession in Europe. And the fear is that you get these negative feedback loops into America, and then you start to see corporate CEOs of U.S. multinational corporations begin to guide down expectations because their end markets are weak. So that's the fundamental story. Then you throw on top of that sort of what I call the three big sort of chaos items, which is Ebola, ISIS, which is on a rampage throughout the Middle East, and then obviously Vladimir Putin and his saber rattling and threats in the Baltics. Those are much less predictable. They're much more chaotic. You don't really know how to manage through that, because just think, I mean, if you come in next week and there's a new person in New York or Las Vegas or somewhere who's come down with Ebola, that's not a good situation.
And each one of those three things can be very volatile.
Oh, extremely volatile.
On their own.
Well,
combine them together and you really have volatility.
Well, this Ebola virus has anywhere from a 50 to 70% terminal rate, meaning that you will die if you get it. And so certainly, like I said, you come in and see a headline where someone's being diagnosed with this outside of Dallas, Texas, where it's been relatively confined. That would create a little bit of hysteria, we believe, and it impacts the economy. I mean, airline traffic, hotel traffic, foot traffic in shopping malls.
Restaurants,
all of that type thing. So those are less predictable. But what I would suggest is that you assess the situation, because I truly believe that what we've witnessed in the last 3 to 4 years, the conditions that were in place, are beginning to go away. So in other words, we had quantitative easing, our Federal Reserve creating $85 billion a month in new cash to go out and manipulate different parts of the economy through capital flows with this freshly minted money. They're not doing that anymore. They've ended it at the end of October. The next thing is when will they begin to raise interest rates, beginning in next year? We think that's probably around the middle of the year. So all of these are big factors. There's a tectonic shift going on right now. And so what we're encouraging every one of our followers to do is to take out their statements, review their current situation, their balance sheet, make sure they're prepared for the next big move, which is going to be quite different over the next 3 years as opposed to the last 3.
Right. And a lot of times what happens, obviously, is you're a professional. You can look at it. Well, you are.
We like to think we are.
You are. And I mean, the same way, if you came into me in the advertising business and said, and you were trying to buy media, you might say, well, Jack, you buy it, that's your area.
Right.
And people look to you to say, okay, I give you the money, manage it.
Well, we take great pride in a truly, a comprehensive wealth approach.
Good.
Balance sheet management, gathering facts, and really helping our clients think through the short-term, medium-term, and long-term situation.
Good. Thank you so much, Brandt. We're going to get you to come back because there's lots more to talk about between now and the end of the
Politics.
year. Politics. Absolutely. And just remember this, that no matter what's happening in the market, you do need to have professional help. It's the best way to manage what you have. And we'll be right back right after this.